On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Hi team, hope everyone is well. Let's run through last week's developments, then let's turn our attention to what we need to be keeping an eye on in the days ahead. Starting with global share markets, and the S&P 500 index in the US did rise 1.7%. We saw a strong start to the earnings season, and that optimism did offset some concerns about bank credit worries and trade tensions with China. So the US had a good week. European shares were up 0.8%. Japan and the UK down slightly, down 0.8% each. Emerging market equities down about 0.3%. Closer to home, the Aussie market was up 0.4% and the local NZX 50 fell 1.3% for the week. That was actually the worst weekly performance since May, and not a terrible week, down just 1.3%, but we have had a very strong run since May. Interest rate markets in the US and New Zealand, we saw wholesale interest rates slip and government bond yields. The US 10-year Treasury yield fell below 4% on Thursday, I think it was, for the first time in about a year. And here in NZ, the local 5-year swap rate finished the week 15 basis points lower. It finished at 2.93%, so under 3% now. That's the lowest we've seen since February of 2022, so about, 3.5 years ago. Gold continued to surge. It was up another almost 6% last week, fresh record highs, and that takes its year-to-date gain to a staggering 62%. That's amazing, isn't it? Gold is on track for its best calendar year performance since 1979. And we could talk about why gold is going up all day, whether it's appropriate for investors to hold as a hedge against inflation and so forth. But I did do an episode on that specific topic a month or two back. And while the price has moved a bit since then, it's kept on rising. All of the principles and ideas and strategies for using gold in a portfolio still apply. So go and track that one down. It shouldn't be too hard to find. There was a research report and there was a podcast episode on gold. Right, looking back at last week's key releases, and to be honest, there wasn't a whole lot that was released. We've obviously got the government shutdown in place in the US, so we haven't seen too much data, and here in New Zealand it was a relatively quiet week. But worth mentioning the latest housing market report from the Real Estate Institute. This was for September, and it did reflect an improving market. Slow, but improving. Activity was up. Prices rising slightly. So national sales volumes up about 2.5% from August levels, and the days to sell slipping from 48 to 43, so that's good. Houses aren't sitting on the market for quite as long. Prices did push a little bit higher. I don't seasonally adjust my prices. I just use what they give us, just like I do for every asset class. National house prices based on the HPI up 0.8% in September. So that's the strongest gain we've seen since February. In Auckland, the HPI was stronger again with a 1% increase. So this is the time of year when you would expect to see a bit more activity, maybe a slightly stronger market in terms of pricing. You know, we're going into spring, but I think the real test will be over these next 3 to 6 months as the weather improves, as those seasonal patterns do provide some typical tailwinds for the market, but more importantly, as we all watch and wait to see whether lower interest rates and what is hopefully going to be a slightly stronger economy do feed into the housing market. So looking to the week ahead, and the government shutdown in the US continues. I think we're into its 20th day now. Very few signs of a compromise just yet. Polymarket odds of it ending this month, October, have fallen to under 20%. So people are betting that there's an 80% or more chance that it will will drag on into November, which isn't great news. We will be watching US economic releases if we get them ahead of next week's Federal Reserve meeting, and the September Consumer Price Index, the CPI report, that is likely to be a highlight on Friday. We were due to get this, I think, on the 15th of October, and it's been delayed because of the shutdown until the 24th of October, which is this Friday. So we should get that on Friday, or it'll be in the early hours of Saturday morning here in New Zealand. So that will be the highlight. We're expecting to see the headline and the core CPI rise 0.4% and 0.3% for the month on an annual basis. The headline expected to increase at a rate of 3.1%. That would be the highest we've seen since May 2024. And the core CPI expected to be unchanged at 3.1. So both expected to come in at 3.1. The core's already been at that level, but the headline actually dipped down into the twos, and it's expected to come back up to the highest we've seen in, about 18 months now, isn't it? So that will be very much a highlight in the United States, as well as we'll all be watching for hopefully signs of that shutdown ending and potentially more trade talks and negotiations between the US and China. Back to data though, and globally, flash PMIs will also be something we'll be watching closely. These will be out for October. We should get them late in the week, and these will help us take the pulse of the global economy. So the Australian measure is due out at 11 o'clock on Friday, followed by Japan at 1:30, and the releases from the UK, Europe and the US that evening or overnight into the early hours of Saturday morning. Last month's PMIs were pretty solid. All of the major regions were above the break-even 50 level, so that was good news. Europe's composite PMI hit a 16-month high. China's reading also improved. Japan was steady. We did see a slower pace of growth in the US, Australia, the UK and emerging markets, but all of them were comfortably above that 50 level, except for the UK, which was pretty much stalled. It came in at 50.1. So global flash PMIs late in the week. Otherwise, we'll be watching Chinese GDP for the third quarter. That's out on Monday afternoon at 3 p.m. And we will get the usual monthly economic indicators as well from China. So they will be in the spotlight on Monday afternoon. We'll get CPI from the UK. We'll also get an inflation report from Japan. So quite a lot to watch on the international front. And that comes ahead of that Fed meeting as well, some of that data. So remember that the Fed meets, I think, is it the 28th and 29th, or it's usually out on a Thursday morning, so that'll be the case next week, New Zealand time. Markets fully pricing another cut, so that is something to keep a close eye on too, that US inflation report. Right, here in New Zealand, we will also get our own inflation report, and this will be out early in the week, the September quarter inflation report, due on Monday morning at 10:45 a.m. The headline CPI increased 2.7% last quarter. That was the June quarter, and the Reserve Bank and most of the economists are expecting that to push higher to an annual rate of 3% for the September quarter. That would be at the top end of the target band that the Reserve Bank targets. So remember, they've got a 1 to 3% band. They've been in the twos. This would see it back up at the top end of that band at 3%, which would be the highest we've seen in more than a year. So this makes for a fairly interesting dynamic, because you've got inflation that's going to push up to hitting the threes again, the highest in more than 12 months, and you've just seen a bigger than expected OCR cut of 50 basis points, and people are pricing in another OCR cut in November of 25 basis points. So people are geared up for more rate cuts, potentially going as low as 2 for the OCR, but you've got inflation expected to come in hotter than we've seen in recent times. So it will be interesting to see what the market reaction is. I guess the one thing to keep in mind is, even though that headline won't be pretty, inflation back up to 3%, which is something we haven't seen in a while, remember this is already in the Reserve Bank's numbers. So they already predicted this, they saw it coming, and they're not too worried about those short-term inflation pressures. They are looking at those medium-term pressures. They're supposed to be following what's going on 18 months ahead, 2 years ahead, and they obviously see reason to keep easing monetary policy. So if it comes in at 3, that'll make for some interesting headlines, but I don't think it will stop the Reserve Bank from cutting the OCR again in late November. So my guess is we still will finish the year with an OCR of 2.25%. Then we've got to wait almost 3 months until February next year to see if they go again. We'll have a new governor on board by that point, and there's a lot of water to go under the bridge because you could see signs of a recovery, which could change the landscape. So that will be an interesting one early in the week on Monday. Also here in NZ, we'll get the latest global dairy trade auction results early on Wednesday morning. Prices fell again at the last auction. The headline GDT index down 1.6%, the fourth decline in a row actually, and the eighth fall of the last 10 auctions. So dairy prices have been slipping back. The index is now down about 12% from its 3-year high that we saw in May, and it's down about 3% this year. However, at least you've seen the currency come off, so that has been helpful in recent weeks and months. So I think people are generally expecting that we will go close to that $10 payout that Fonterra has guided us to. So whether it's slightly up or slightly down, we'll have to see how the rest of the season develops. But no one's panicking about a bit of weakness in dairy prices. Also, there is a lot going on the corporate front. So both here in New Zealand, across the Tasman and internationally, and we'll do them in that order. So here in New Zealand, lots of AGMs, Meridian Energy, Property for Industry, Fletcher Building, Steel and Tube, Auckland Airport, Scalar Tourism Holdings, all of those companies holding annual meetings. And when you get an annual meeting, you often get a trading update. So there'll be lots to watch on the corporate calendar. Across the Tasman, Cleanaway, APA Group, National Storage, Cochlear, BHP, Brambles, South 32, all of those businesses also holding annual meetings. So we should get some trading updates on that front too. And internationally, lots of corporates releasing results. Pretty good start to the reporting season. Lots of those US banks, some of the real heavyweights of the financial sector, posted very strong results. So it was a good start. This week, things will continue. We've got 3M, we've got Coca-Cola, we've got Netflix, IBM, Tesla, Thermo Fisher, Intel, Procter & Gamble, so something for everyone this week. Couple of bits of housekeeping before we finish up. If you've seen my face, or there was even a video, an AI-generated video of me, a fake one, obviously, had an English accent, which I think made me sound a little bit smarter, a little bit more sophisticated. But all of that is spam. All of that is scammers that are trying to take your money. So ignore all of that garbage. I'm not on WhatsApp for anything other than the 28 sports teams that my kids are a part of. So I'm not talking about market stuff. I'm certainly not trying to give stock picking advice. The only place to get that is right here in this podcast, or via your advisor, or via the official Craig's website. You'll never see it on Facebook. You'll never see it on a WhatsApp group. So don't fall for those pump and dump schemes that are going around. They are just trying to shaft you and make a profit at your expense. Second piece of housekeeping before we wrap up. Next weekend, Labour weekend. I'm away with the family. We go away every Labour weekend, so I won't be here to record or write one of these reports/podcasts. So we'll take a break this time next week. But other than that, plenty coming in the pipeline, so we'll talk to you again soon. All right, enjoy your week, team. Thanks very much for listening.
For more insights, visit craigsip.com.